Most people watching this right now are about to make the same mistake millions of retail investors make every cycle. And it's not because they're stupid, it's because they're being played. Right now, silver mining stocks look weak, broken, almost dead. Prices are down, charts look ugly, and the headlines are screaming fear. Retail investors are panicking, selling, giving up. But here's the uncomfortable truth no one tells you in the first 10 seconds of this video. When fear is loud, smart money is usually quiet. And when retail is dumping, insiders are often loading. This isn't theory. This is how the game has always been played. And if you don't understand this hidden game behind silver mining stocks, you'll keep reacting late, buying tops, and selling bottoms, while others build wealth silently. Before we go deeper, if you want clear thinking in chaotic markets and real conversations about money, power, and timing, make sure you like this video and subscribe to Wealth Wave right now. It helps the channel grow, and it tells YouTube to show you more content like this. Now let's talk about what's really happening, because once you see it, you can't unsee it. Here's the first thing you need to understand. Silver mining stocks are not priced like silver itself. They are priced like optionality. They represent future potential, not current comfort. That's why they get crushed the hardest when fear enters the market. Institutions know this. Banks know this. Funds know this. They understand that miners are volatile, emotional assets, and that retail investors have weak hands. So what happens every cycle is simple. Silver prices stall or pull back. Costs go up. Headlines turn negative. Analysts downgrade. Retail gets tired of waiting. And right at that moment, the real accumulation begins. Ask yourself this honestly. If silver mining stocks were truly worthless, if the future was truly dead, why do insiders keep buying? Why do executives increase ownership near bottoms? Why do large funds quietly add positions when volume dries up and nobody is paying attention? This is not coincidence. This is strategy. Smart money does not chase hype. It hunts despair. Retail investors are conditioned to believe price action tells the full story. If price is falling, they assume value is gone. But professionals look at something else. They look at replacement costs. They look at reserves in the ground. They look at production curves, geopolitical risk, supply constraints, and most importantly, timing. Silver is one of the most strategically important metals on the planet. It is essential for solar panels, electric vehicles, military tech, medical devices, and advanced electronics. Demand is structural. Supply is tight. New mines take years to develop. Yet mining stocks are priced as if silver will be irrelevant forever. That disconnect is the opportunity. This is where psychology comes in. Markets don't move on logic. They move on emotion first, logic later. Fear creates discounts. Patience captures them. When retail panics, volume spikes on red days. When smart money accumulates, volume dries up, price moves sideways, and nobody talks about it. That's exactly the environment we're in now. Boring, frustrating, painful. And that's why most people leave. Think about every major bull run in history. Bitcoin, tech stocks, gold, oil. None of them started when everyone was excited. They started when people were bored, angry, and exhausted. Silver mining stocks are in that same emotional zone right now. They're unloved, ignored, mocked. And that's usually when the foundation is being built. Another thing retail doesn't understand is manipulation through paper markets. Silver is heavily traded through futures, ETFs, and derivatives that have nothing to do with physical supply. Paper contracts can push prices down short-term, shake confidence, and create the illusion of abundance. But physical demand doesn't disappear. It builds pressure. Eventually, reality catches up. And when it does, mining stocks don't move slowly. They reprice violently. This is why insiders position early. They don't need perfect timing. They need exposure before the narrative flips. Once mainstream media starts praising silver miners again, once analysts raise targets, once YouTubers turn bullish, most of the upside is already gone. Smart money is already sitting comfortably while retail rushes in late. Wealth Wave exists to help you see these cycles before they explode, not after. And this is one of those moments where patience matters more than prediction. You don't need silver to moon tomorrow. You need to understand the asymmetry. Downside fear is loud. Upside potential is silent. That silence is where wealth is built. Let's talk about why retail panics, specifically in mining stocks. Mining is hard. It's messy. Costs fluctuate. Political risk exists. Permits take time. This scares people. But those risks are exactly why the rewards can be extreme. When silver prices rise even modestly, miners' margins expand dramatically. A small move in silver can create a massive move in mining profits. That leverage works both ways, and right now, it's scaring people out at the worst possible time. Another uncomfortable truth is that most retail investors don't actually want wealth. They want comfort. They want confirmation. They want green candles and positive headlines. But wealth comes from being early and uncomfortable. Smart money understands this deeply. That's why they don't tweet their buys. They don't hype positions. They accumulate quietly and wait. Ask yourself one more question. If silver mining stocks are truly doomed, why hasn't production collapsed entirely? Why are companies still expanding, merging, acquiring assets, and planning years ahead? Businesses don't do that if the future is dead. They do that when they see opportunity that the market is mispricing. This is the hidden game. Shake out weak hands. Create boredom. Let fear do the work. Accumulate cheap assets. Then wait for the macro environment to force a revaluation. Inflation, debt, currency debasement, energy transition, and geopolitical instability all favor hard assets over time. Silver sits right at the intersection of money and industry. That's powerful. None of this means price goes straight up tomorrow. It means positioning matters more than prediction. It means understanding where we are in the emotional cycle. And right now, silver mining stocks are in the part of the cycle where retail gives up and professionals lean in. If this video is making you think differently, drop a comment below and tell me whether you're watching silver or already positioned. Your perspective helps the community, and I read the comments. And if you know someone who's panicking or confused about silver mining stocks, share this video with them. Sometimes one clear explanation can save years of mistakes. This is Wealth Wave, and our goal isn't hype. It's clarity. Stay patient, stay curious, and remember, the biggest moves usually start when nobody is watching.